Hello and welcome to another update video about gold. There is no change to the wave count at all. I think at the moment it's just playing out the waves that we discussed in the last video. On the weekend, I think we talked about, where were we? I think we were talking about we could possibly come back in this wave 2 here. I gave you a trend reversal area. We came back basically to the 50% FIB level. Quite, sort of didn't need to touch the 50%. So maybe we still do that, yeah. The ideal retracement in a wave 2 would go normally into the region, well, the ideal retracement of the wave 1, right? So the target for a wave 2, normally you would want it to go into the area between the 50% retracement and the 78.6 retracement. Would be between 1993 and 1961, basically. So maybe we'll still do that, but we'll talk about that in a minute. Overall, the bullish pathway here continues. Was correct to not be bearish at the moment, at least. And yeah, as long as we're holding here these support levels, we can just focus on higher. Should we see it coming that these are breaking, then of course I will update the scenarios. But for now, these tradable areas are working out here. This was a long-term trend reversal area that I already introduced a year ago. We came into it, turned around. So this was hopefully helpful for most people who've been following this channel for a while. Then we rallied in wave 1 of this 2020 low, came down into wave 2. Yeah, quite a shallow one, to be honest, quite a shallow correction. And I still cannot rule out that this is some kind of an overshooting B wave. Yeah, what the, let's say, bearish perspective would be, or short-term bearish would be, that the move of this wave 1 high, which happened on the 2nd of February, was just an A wave. This here is an overshooting B wave, and we could still come down in a C wave. Maybe even deeper into this area. That would be quite a bearish perspective. Would basically reset this wave 2 a bit lower. And this support area goes down to 1694. So what that means is that even if we come back here, as long as we're holding 1694, there is still a third wave rally possible from here. Let's just check if that's actually still likely, because you want the B wave. If this is an overshooting B wave up here, which again would be the, let's say, bearish perspective or short-term bearish, it would normally need to stay below the 1.38 FIB retracement. Now let's just double check that. I think we're still good in terms of that retracement. Overshooting B wave, yeah, just about here. We're at the pivot. So a break above 2036, a sustained break, would basically make this overshooting B wave perspective very unlikely. Okay. So there is of course another, let's say, bearish possibility, but for now I remain focused on higher. It's of course possible that what's coming down here is some kind of, but that's really far-fetched. That this would be an A wave. All of this is a B wave, and we come down and C once more. And then this wave 4 actually was just an A wave. So A, B, and then C, and the wave 4, which is the higher degree fourth wave before we rally in a fifth, would end somewhere down here. I mean, there are many backup scenarios, right? But, I can show you 10 counts here. It would be pointless. So what we only want to focus on the trend, right? And the trend is up, and so far it's adhered to these trend reversal areas. We rallied higher. Yeah, in this obviously this February low here, February and March lows. We rallied in a wave 1 of a higher degree third wave. Came back in a wave 2, hit our trend reversal area here on the 22nd of March, rallied again in the first wave of a higher degree third wave, and gave you then this trend reversal area or support area. So far we're holding that. And as long as now, and that's the relevant micro support now, as long as we're holding 1961, I think we can focus higher in this pattern. Again, what could be, and this is only the micro perspective, that this move down again was an A wave, here a B wave, and we come down once more in C. Not unlikely, because this move up looks a bit choppy. Yeah, the move that started here on the 10th of April and goes until today. So this could just be a B wave again, we come down in C. But as long as we're holding 1961, the focus is on higher, because it's of this particular 1-2 setup. This particular wave 1, the 78.6 FIB level is relevant. Any drop below the 78.6 FIB level makes such an uptrend less likely. I mean, we would in that case just fall back into the yellow box, right? Which is between 1889 and 1938. And if we break above this wave 1 high, which is at 2048, I think we have good confirmation that we're in a third wave. It could still be a B wave top, overshooting B wave and so on, but the probabilities for a direct third wave rally would increase. What is the target for this particular third wave? So let's look at the next target. So we talk here about the 1.618 extension, $2,134. So yeah, that's all looking good so far. There's not much more to add. Trend is up. As long as we're holding 1961, I would focus on higher. And yeah, ideally we are gonna move on here. You know, as you can see, this would cascade quite a bit higher eventually, and maybe we'll reach that $2,500 range here at some point. Still quite far away, a lot of work to do, but this would be the target for a larger fifth wave. So I had a question in the previous video, you know, entry points and so on. I mean, to talk a little bit more about that, obviously I can't really tell you when to enter, because this is first of all financial advice, which I can't give, legally not, and also I don't know you. You know, I don't know you because I don't know your finances, I don't know your risk appetite, I don't know your strategy, I don't know your trading plan, things like that. I can give you, however, the areas where I believe the price should turn around and the relevant support areas and these pivots, and they can of course be used for trading. Now, breakout traders wouldn't like them, but pullback traders would. So for example here, this was a trend reversal area, so it's possible obviously to set some buy orders in these areas, and not even, you can start a bit higher obviously, right? But that's up to you. And then set a stop loss maybe below these areas, yeah, and here as well, scaling into these support areas. I mean, you can start a bit higher because sometimes you miss them by $1 or something. And then these are the areas, because these are the areas where you can measure your risk, because as I just said, as long as we're holding 1961, we can focus on higher. Now that means some people, depending on which strategy you might be using, could set a stop loss below that 1961 level. So if you have a reward, yeah, possible reward or reward to risk ratio, which is quite high, then this might make sense, yeah, depending on your strategy again, right? Because if the overall target of this move is sort of, and it would be sort of the $2,500 range eventually. Now that will take months, maybe even a year to get there. But the risk, you know, you might just be risking here, whatever, $40, but you could gain a few hundred. Then this is a decent reward to risk ratio. So that's how it's supposed to be understood. Yeah, these support areas are basically entry points for pullback traders. Yeah, now you know, there are hundreds of strategies, and it's just one way of trading this. But in my opinion, one of the best ways to trade Elliott wave is to look for these 1-2 setups, trade the wave 2 pullback, go long, right? But yeah, again, it's up to you if you do it. But I can only give you these areas where I believe the price has a good chance at least to turn around. And the benefit of those areas is, and we get them through Elliott wave, if you break below them, it normally reduces the likelihood of this move working out. So you have a clear stop, which is good. All right, that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.